Welcome to The Explainer. Today, we are diving deep into the absolutely mind-boggling amounts of cash big tech is pouring into artificial intelligence. So, are we watching the birth of the next great technological revolution, or are we just inflating a bubble of historic proportions? So let's just start with a number that's kind of hard to wrap your head around. $5 trillion. That's not the value of the entire AI industry. No, that was the recent market value of a single company, NVIDIA, the chipmaker that has become the absolute heart of this entire AI boom. And it doesn't stop there, not by a long shot. This year alone, the big players, we're talking Meta, Alphabet, Microsoft, and Amazon, they're on pace to spend a combined $400 billion on their AI projects. To give you some perspective, that's more than the entire yearly GDP of a lot of countries. So when you see these kinds of numbers flying around, it's no surprise that investors, analysts, even the execs inside these companies are all asking the one question that is on literally everyone's mind. So let's get into it and see what's really going on. All right, here's our game plan. We're going to start with the sheer scale of the spending, then dig into the motives behind this crazy AI arms race. After that, we'll untangle the complicated financial web that's funding it all, check in with a pretty nervous Wall Street, and see how this boom is spreading across the entire globe. And then finally, we'll weigh all the evidence. You know, the amount of money being invested is just staggering. But what's really wild is that even after spending hundreds of billions, the biggest companies are all saying the exact same thing. It's still not enough. I mean, just listen to Microsoft's CFO, Amy Hood. She's straight up admitting they can't build data centers fast enough to keep up with demand. That's a huge signal that their spending isn't just going to continue, it's going to speed up. And trust me, they are not the only ones feeling this pressure. So, what on earth is driving this historic level of spending? Well, it all boils down to a super high-stakes, winner-take-all race for what they think is the future of technology itself. The endgame, the holy grail for a lot of these companies, is something they call AGI, or Artificial General Intelligence. And what's so fascinating here is the motivation this creates. The core belief is that whoever gets to AGI first, well, they'll basically dominate the next 100 years of technology. And as analyst Yusuf Squali says, this is not just about opportunity anymore, it's about survival. For these tech titans, the biggest risk isn't spending way too much money and being wrong. It's not spending enough and getting left in the dust. Okay, so they're spending a fortune. But where's all this cash actually coming from? And how is it moving around? Well, it's not a simple answer. It's a really complex web of deals that has some people getting serious dot-com era flashbacks. Let's try and untangle it. You know, analysts at Morgan Stanley came up with the perfect description for how capital is flowing between all these AI companies. They said it looks like a plate of spaghetti. And honestly, that's exactly right. It's messy, it's all tangled up, and it's really hard to see where one thing ends and another begins. Okay, so here's the deal. We're seeing these really circular deals where the money just flows between companies that are investors, customers, and partners all at the same time. Like NVIDIA will invest in OpenAI, and then OpenAI turns right around and uses that cash to buy a ton of NVIDIA's chips. Or Microsoft invests billions in OpenAI, and OpenAI then signs a massive contract to use Microsoft's cloud services. It's this self-fueling ecosystem. Now, this isn't exactly the same thing that led to the dot-com crash with companies like Lucent Technologies. Back then, companies were literally loaning cash to their customers to buy their products. Today, it's more about taking equity, a piece of the company. So the risk is a little different, but that dependency, that feedback loop, it creates a very similar kind of systemic risk if the whole thing starts to wobble. So as you can imagine, this level of spending and these, let's call them creative financial setups, are making some folks on Wall Street pretty nervous. And you can really see it in how the market's reacting to the latest earnings reports. Let's just take Meta, for example. The company reported a monster third quarter, with revenue over $51 billion. I mean, by any normal measure, that's a home run, right? Well, not so fast. Because on that same call, when Meta said it planned to aggressively ramp up its AI spending even more, its stock just cratered. It dropped over 11%. Microsoft saw a similar, smaller dip, but Google, on the other hand, actually gave some details on how their AI investments were paying off, and their stock went up. Investors like Brian Mulberry here are pretty much losing their patience. The message from the market is getting loud and clear. The era of just writing blank checks for AI is over. Wall Street now wants to see a clear path to actually making money from all this. And you know what? This isn't just a Silicon Valley story. Not at all. This AI spending spree is global, and it's being driven by a really powerful new idea that's changing where all this tech gets built. The philosophy is being called AI decolonization. Basically, developing nations are starting to push back hard against the old model, where foreign tech giants come in, vacuum up all their citizens' data, process it somewhere else, and then sell the AI services back to them. And NVIDIA's CEO, Jensen Huang, has become a massive champion for this, calling it sovereign AI. He's actively going to countries and encouraging them to build their own AI infrastructure to control their own data. And what a coincidence, this just happens to create massive new markets for AI hardware all over the world. So this is sparking this incredible global construction boom. We're seeing things like a $15 billion AI center from Google in India and huge new data facilities popping up in places like Indonesia and Thailand. The result? A country like Indonesia is projected to see its data center revenue grow six-fold by the end of the decade. It's just massive. So, after looking at the motives, the money, and the global spread, we circle all the way back to our big question. Is this all a bubble, or is it a genuine breakthrough? You really have two sides to this coin. On one side, the bulls, the breakthrough believers. They argue this is a necessary investment in a technology that will change everything, kind of like the internet did. They say the demand is real and the fear of being left behind is totally justified. But on the other side, you've got the bears. They see a speculative mania, pointing to spending that's way ahead of revenue, financial deals that look dangerously interconnected, and they're skeptical that today's AI is even on the right path to true AGI. You know, those complex, circular deals fueling this whole thing, they can be a great thing on the way up, creating this cycle of investment and growth, but they can become absolutely vicious on the way down. And that leaves us with a final and kind of provocative thought. What happens if or when the hype fades and the money starts to dry up? What happens when the music stops?